Hello everyone, good morning. It's your favorite coach Larry FX Academy once again, and today we are going to be discussing about one frequently asked question, which is what are the best technical analysis we can make for trading the forex market? So now, this particular question is a really it has been a really important question to a lot of traders, and they ask this a lot. What are the best ways to trade? What are the best ways to trade? What are the best technical analysis we can do in order to get the right trading direction? Now, today I'm going to give you my honest opinion on that. And on this particular video, would be diagnosing that particular fact. Now, I'm going to be giving you different ways to enter the market. Now, the best ways to trade are of different patterns. You understand? The best ways to trade are of different patterns. Now, if we can look at this chart, we are on the chart which is on the volatility 100 chart. Now, clearly, if you can look at the chart, you see this particular chart is currently on the 24 hours time frame, which is basically the 1 day time frame. Now, when you want to do your technical analysis, it's only right we do our technical analysis understanding how whichever strategy we are making use of has been applicable to this particular market in the past. Then we can now relate that with how that particular strategy will be applicable in the market in the future side of it or side of things. Now, if you look at this particular chart, this chart actually has created this particular high and also this high, thereby giving us two levels of highs that the market has created from 2024, which is this particular year. And one other thing again we can clearly see on this particular chart is if you can see, it has also created two strategic levels of lows, which is this low and this low this year, between all the move that has happened this particular year. So now, this being the case, it has helped us to be able to filter this market and give us what we can term as an exact analogy on the higher time frame. You have to understand that market from this particular area, it dropped to the downside and it tried rallying to the upside, bouncing around this particular trend line at the bottom, and from this point it pushed up, creating a resistance, and then since that point price has started tanking or dropping again to the downside. Now, this is very important when it comes to the market because it helps us to be able to understand our bias in trading. You understand? Now, before we do anything further on this particular chart, we just want to look at the market in different way or in different perspective that it has presented itself to us, and then we use that as a criteria for setting entries. Now, in trading, if you always hear me talk about trading, you always hear me say, I don't trade one particular method alone. I don't trade one particular method alone. I trade multiple methods of trading. Why? Because I learned from different traders. You understand? Now, this particular area is very well, I'd say it's so straight, it's so catchy in our eyes because if you look at the charts, this particular area has been tested multiple times. Now you see market pushed into this point, it dropped, it pushed into this point again, it dropped, tried pushing again, it dropped. You will start making this area a strong level of resistance. That is very good. We see that. Now, after that happened here, what can we see again? We can see that this low here was also a point market respected several times. We see price got into this point, it rallied to the upside, got in here again, it rallied to the upside, got in here, it rallied to the upside. You understand? So this is another environment or another area where market has reacted several times. Now what can we see again? We can also see this particular low. You understand? This particular low where price tapped here, reversed, tapped here, tried reversing, broke it, pushed up and still tapped it again before it finally broke it again to the downside. And if you should even extend it down to this point, you will see that price broke it, tested it and made retracement. All of that. It has just been respecting this particular area. That is one thing we can see. Now, this particular method of trading is what we call the zone to zone trading. Now, see this particular area again. We want to just drag this particular level of support, which turned into resistance at this point. So you can see how market reacted. And you see, market reacted to it several times. You understand? So this particular thing, it's not like any big deal. It's just something you can easily see with your eyes on the chart. You understand? Just something you can easily see with your eyes on the chart. This is something you can easily just define. Oh, market has done this. You understand? And you just have to explain it out. Understand that market has done that. No need to start trying to plot extra levels, structures, this. No. Just understand this is the level of resistance. Market has resisted this point several times. Market has, like in terms of respected this point in support and also resistance forms. Market has respected this point. So these are just points and level market has respected in the previous time. Now we can also see this level of support. You see, market also did same thing. Respected this place previously, dropped here, respected it, and if we should drag it alongside, you can see price did same thing, expected it, dropped again, expected this, dropped, expected it, and dropped again. Now it's just very simple. It's a very straightforward thing market has done. So it's not something we come and we try to begin to bring out multiple facts. Now if you look at this area here, what can you see here? Market respected here previously. Its market is also at this point, and from this point it's created a bullish candlestick, bullish engulfing or bullish candlestick. Now we can possibly see market expecting, even if it won't expect it massively, but there's a reaction going on here, which we shouldn't be blind to that particular reaction. You understand? So this is something we just look out for in the market. Now all I just did is just showing people zone to zone of where market has expected at certain points in times and dropped from all of that. Now the reason for this particular reversal from this point is what one thing we always like to see in the market. If you follow me, you will see I always talk about liquidity grab we saw there, break of structure to the downside we saw here, and price given as usual is reversal from this particular point to this point. So if we should fix our Fibonacci, you see price got into the 0.618 level, and then that was the reason it did its dropping. So originally using our Fibonacci tool, it always tells us that we look out for final take profits at the 0.27 level, which is even aligning with our take profit. That's what this trend line is actually aligning with. So what can you clearly see? You can clearly see that two things will happen. Either price will drop down to this point straight off, or it will retrace from here into this particular resistance point, resist here, and then drop back into this zone. So that simply tells us, okay, this point is a level we are looking out for in the market. Now you see, we are just going about it calmly, no much stress, no much noise, and market will actually respect these levels. Now we'll go down to the smaller time frame. On the smaller time frame, what can we see? On the smaller time frame, we can now just try to implement trend lines. Let's look at trend line. If you're using the trend line strategy, you see this particular trend line from this point to this particular area. You can drag it through. This price is weak below our trend line. We don't want that, so we drag it this way, and then you can see what happened. Price closed below it, and we are expecting price to drop into this point. You can see that it happened around here, but then this is the 4 hours time frame, so you just have to understand what you're doing while trading during the daytime. So that's one thing to do on this particular one. And now we can see this particular point of price tapping into this particular area. Market has done its retracement, and the possibility of price dropping into this downside is high. Breaking its low is high. Sorry about that, guys. So we can just come down to this point and try to look out the structure, look out for the structure market is doing there. Now, see one other thing. On the smaller time frame, you can now see that there's a level at this point, which is a support level. Anytime price gets here, it pushes up, it gets here, it pushes up, gets here, it pushes up. You understand? This is also a resistance point. Anytime price gets into the resistance point, it pushes to the upside. And anytime it gets into the resistance point, it drops to the downside. So this is just it. You can't make it up. You can't make this shit up. You just have to flow with the market. You understand? And then, sorry. And then it also aligns with top-down analysis. You understand? Now, looking at this particular chart, what can we clearly see? We can clearly see that we have a break of structure at this point to the downside. And then we have liquidity grab to the upside. But then we can see market price was trying to drop to the downside, and price broke this resistance, creating liquidity, and then broke structure, which is nice. We like to see that in the market. And what do? We mark from our swing high to our swing low. So marking from our swing high to our swing low, we have this particular area of interest. Marking this particular area of interest, it simply tells us price got into this particular level. Simply tells us price got into this particular level and reacted from it, dropping to the downside. So what are we seeing? On this particular one, we are clear for a sell. Now this is a 1 hour time frame, which even makes it much better. We're supposed to take our sell from this price, put stop loss at this point, and set target take profit price. So that's supposed to be our trade. Price is already going almost price is currently about 1:2 or 1:1.5 basically. So but that being the case, we remove this. Okay, fine. So now one thing I can simply say, okay, let's get to analyze what we have between this particular price level. So we can anticipate. Now you understand that we actually understood this particular level price rejected from this point to the upside. Now some persons will want to take or look for a buy, saying, oh, we have this as a break of structure to the upside and all of that. But then are you in the right direction when you already understand that price has done its retracement from that price to the upside? So that is not really going to be a nice idea, trying to catch buys from that point. So now let's go to the smaller time frame. So on the smaller time frame, we now have to now implement different patterns in the market. So let's remove this. Let's remove that. Now, one thing I easily would love to do is to mark our trend line to understand what we are playing around with in the market. So if we should plot our trend line this way, we can clearly see that price did something on the 5-minute time frame around here, which is really important. It's cleared out all of this liquidity by this push to the upside, and currently is creating new structures at this point. which is something we like to see in the market. This level is our clear trend line break. This level is our clear trend line break. This area. Now we have a clear break of structure to the downside. We mark from our swing high to our swing low, and let's see what market has done. So break of structure at this point. We mark from our swing high to our swing low. So doing that, marking from our swing high to our swing low, we can see price has gotten into our 0.618 level and it has respected it. And price is rejecting from this point. So what do we simply do? We would simply wait. We can't enter anything on this particular market. So the best thing is we want to wait and see price break this particular level. So if price breaks this level on the smaller time frame, we can now expect a reaction from this particular swing low, swing high to the swing low that will be created. Then we expect maybe the market reacting from this particular level to the downside, taking this as our new liquidity and that as our new break of structure. So when price breaks to the downside, we take this area as our new liquidity, understand? Then we'll take this zone as our new break of structure. Understand? Price breaks to the downside, fix its reaction, and then boom, it can go to the downside. So this is just our anticipation. We can now take that sell to this particular area of interest. So this is what we can be looking out for on the volatility 100 index pair, but then trying to give you guys the breakdown on the best way to analyze the market. I've simply showed you guys that you have to come down from analyzing the highest time frame until you're able to go down to the smaller time frame. You can see now we're on the 5 minutes time frame, but we started from the 24 hours time frame. So this is the best way to go about your analysis. If you have any questions on this particular video, please drop it on the comment section, so I will do well to make another video explaining and going in a deeper form, trying to give you guys a better and a clearer view on this particular perspective. So do have a wonderful summer. Peace, one love.